Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to clear up some tax residency myths and hopefully give you guys a little bit better understanding, because there's some common things that I keep hearing again and again. I've tried to address these in some other videos, but I think there's a few points that are worth noting that, again, are just important. So we're going to dive into them today, and hopefully that's going to help you figure out better what the solutions are for you. If you haven't already, please hit the subscribe button, hit the all notifications bell so you don't miss out on any of our videos. If you'd like help, if something in these explanations aren't clear, you need it personalized for you, etc., please reach out to me. You can book a call, calendly.com/Michael-Rasmer, link in the description below. I can help you with residencies, citizenships, international tax optimization, asset protection, payment processing, getting, not just figuring out what the best solution is, but also actually doing that stuff for you. Our team can help you out with that. So, okay. Now, so the thing that I want to clear up today mainly concerns the fact that you can be tax resident in multiple places or tax resident in no places, okay? So the common thing that I have people call me up on is they'll say, oh, great, I'm going to go to Cyprus and I can be tax resident there if I'm just there for 60 days. I can do that, no problems, and that's great. Well, the problem is that you could be tax resident in multiple places. Just because you're tax resident in Cyprus doesn't mean you're not also tax resident in Canada or UK or Australia or whatever other place, Germany, etc. Okay, so people seem not to realize that you aren't tax resident in one place. Tax residency is a status that you have, and it's not mutually exclusive with a status somewhere else unless you have a tax treaty. And most countries don't have tax treaties. To give you some concept of this, Canada has about one of the biggest networks of tax treaties in the world, and they have about, I think it's 92 tax treaties. So, there's 196 or so countries, more than that if you count jurisdictions, etc. And, there's 92 of them there, and that's from one of the top. I think the US is around 46, 50, something like that. So, again, like 1/4 of the countries of the world, less than that in jurisdictions that you have tax treaties with. So, most of the time, or in a lot of cases, you won't have a tax treaty to protect you. And if you don't, you have to be thinking, okay, I'm not just worried about tax residency here, I'm worried about it here as well. And this is, again, another reason why I've done some videos and talked about this before, that I'll see people, they're like, oh, I want to get a tax residency certificate. I'm like, it's useless to you in most cases because of the fact that you can be tax resident there and it doesn't preclude you from being tax resident here. Okay, so understand, you can be tax resident in multiple places simultaneously. A big part of the planning that we want to do is to prevent you from being tax resident in two places at once, okay? Number two is you can be tax resident nowhere. So just because, say, this is not necessarily true for everybody in all countries. I've mentioned before, some countries more or less require that you're tax resident somewhere else. But in theory, this could be the case. And so some people will say, oh, hey, I'm going to leave UK, where can I go to become tax resident? Well, you don't necessarily have to go anywhere to become tax resident, because what matters is that you're not tax resident in UK to not be taxable, okay? So you can be tax resident somewhere or multiple places, and you don't have to be tax resident elsewhere, okay? Those two things can be true. Not necessarily true. The facts matter. We have to dive into those situations, but those things can be true. And in fact, this was the focus of, say, Apple's corporate structure for decades. Was they had a company that's very famous that people talk about, Ireland. They talk about the double Irish with a Dutch sandwich and all these fancy things, and people were thinking Ireland, 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 right? It's Ireland that's so special, and it's low taxes in Ireland. I remember going for dinner with somebody, and they had some guest who showed up, and the person didn't have any clue what they were talking about. They heard what I did, and they said, oh, all I know is if I get rich, I'm just going to set up in Ireland. And I was like, this is like the most moronic thing I've heard all night. It's not Ireland. What it was that Apple could have a Irish registered company, which was not a tax resident company because it was managed and controlled from the US, and there was a double non-tax residency. So it wasn't claimed as tax resident anywhere, and they didn't pay taxes on it for like 20, 30 years, something like that. Anyway, a long time. So that's a really, really important thing to understand, okay? Is that you can be tax resident somewhere, you can be tax resident two places, you can be tax resident, in theory, three places, and you can be tax resident nowhere. And your objective is to reduce your tax residencies, partially for the sake of simplicity, because who wants to deal with taxes in multiple countries, right? And do it in such a way that it is as efficient as possible. Sometimes it's more efficient to be tax resident somewhere and be able to at least claim that status than it is to be tax resident nowhere. Sometimes it's not a good idea to be tax resident nowhere. The final thing that I'll throw in here is some people will talk about banks, right? Because banks will always ask, where are you tax resident these days? It's like a common question. And the interesting thing is, what you tell the bank has nothing to do with reality. Okay? It doesn't have to do with your tax obligations at all. They will often require that you put in some number. Okay? That's often the case. In order to claim it, you pretty much certainly need to have some sort of residency status there, and you need to have some sort of a proof of address wherever you're claiming to be a tax resident. But that doesn't necessarily mean that you're taxable there. And so there's ways that you may want to optimize that and have something for banks which isn't necessarily the same as what you have for governments. These are two different bodies. And the same is true if you're dealing with payment processors or a bunch of different other groups. As you know, you may want to say, okay, I'm going to claim one here and I'm going to claim a different thing here. And I can do that because they have a different set of rules. Okay, so I hope that helps, gives you some ideas, some insights. If you have questions about it, put it in the comments below, and I'm going to look forward to seeing you guys on the next video.